Hey guys, what's going on? Yes, I know, another YieldMax video, but you know what? This channel is about retiring on dividends. It's about me sharing my journey of how I will retire on dividends. Just a matter of when, of course. And right now, YieldMax is the key to that journey because I know I have not found a better option to, I'll say, jumpstart my early retirement, again, via living off dividends. So anyway, today's video, I just wanted to talk about YieldMax again, obviously, but I wanted to go over the prospectus and, just kind of review it really quick and try not to bore you guys. I know, reading the documentation on stocks, ETFs, very, very boring. But sometimes, people on YouTube, myself as well, I'd rather not read it, but more so listen to it, like especially on my way to work, etc. So I figured since I'm reading it most times anyway, I'll just, I'll make a quick video so others can enjoy it and, listen to it. So anyway, I'm on the YieldMax website, obviously, as you can see. I'm just going to go through TSLY and the drill for the most part. And again, when I make these videos, I'm always assuming people have watched my previous videos, so I need to stop doing that. But anyway, this is the TSLY screen from the YieldMax homepage. TSLY is one of their funds. It's the highest paying yield, 66% at the moment. Tesla has been dipping, so this rate is going to keep going up and up and up because it's based on the prior payment. So anyway, let's scroll down and we're going to go to where they have the documentation detail under the literature. So there's an option to view the prospectus and there's an option to view the summary prospectus. The prospectus is a little unrealistic. As you can see, when I open it, it had 126 pages, which, I've skimmed through. It talks about all these funds, but, it's a lot. So we're not talking about that today. Now, they have a summary prospectus, which I believe, honestly, is a requirement now from ETFs because I think I saw this on Clip as well, Clip's website, so which is good because, who has time for over 100 pages? So here's the summary prospectus, and I just wanted to go over the basics so everyone can understand the YieldMax funds. So, again, the fund's primary objective is to seek current income. As you can see, the primary objective is to seek current income. So, we're not here to get rich off capital. We're here to get income. Again, if you want to retire on dividends, if you want to use the income now, this is a great fund to use. The fund's secondary investment objective is to seek exposure of common stock Tesla. Again, this is talking about the particular fund TSLY, which follows Tesla. And it says subject to a limit on potential investment gains, which we'll get into in a second. And then they talk about fees, blah, blah, blah. But long story short, the fee is 0.99%. That's an annual fee. So it just comes off the top of, the fund that you really won't even notice. But yeah, 1% is high in the ETF world. However, the amount of effort that they put into this fund selling options is worth it, in my opinion. It's not easy. I do options. I've done options, and I've kind of got my ass kicked too in options. So I know how hard it is. Next category, they just talk about $10,000, what it would be from 1 year to 3 years, but that's just the capital. So who really cares about that? Portfolio turnover, it just says they sell, buy and sell securities. So there is a high turnover rate. Principal investment strategies. It just says it's a exchange traded fund that seeks current income while maintaining opportunity exposure to the share price of the common stock Tesla. So again, and here's the bullets: exposure to the share price returns of Tesla, current income from options premiums. However, again, it always mentions limit on the fund's participation in gains, which again, we'll get into. Now, this is confusing, the whole setup. The fund's investment advisor is Toroso Investments LLC, and the investment sub-advisor is Zega Financial. Okay, I'll have to make another video on, who exactly they are. So why would you invest in this fund? Again, a lot of this is repetitive, and I apologize, but again, I'm just trying to go through it real quick. The fund seeks to participate in a portion of the gains experienced by Tesla. Portion. The fund, again, sorry, I'm drinking coffee. The fund seeks to generate monthly income, which is not dependent on the price appreciation of Tesla. Okay, great. All right, what else? More bullets, kind of repetitive. I don't want to repeat myself over and over. Well, here's an important one. The fund does not invest directly in Tesla. They sell covered calls in Tesla, but they do not invest in Tesla. How do they do that? They do that via synthetic shares. Also, fund shareholders are not entitled to any Tesla dividends. Tesla doesn't pay a dividend, so that really doesn't matter. But when you invest in Apply, the Apple fund, you will not get the Apple dividend on top of the options premium. You'll just get the distribution from the options premium. Now, here's a part that I was interested in. As part of the fund's synthetic covered call strategy, the fund will purchase and sell a combination of standardized exchange traded and flexible exchange call and put option contracts that are based on the value of the price returns of Tesla. Flex. So they're talking about flexible exchange. What in the hell is that? So I had to look it up real quick. So the flexible exchange, or AKA flex, are non-standard options that allow both the writer and the purchaser to negotiate various terms. Terms that are negotiable include the exercise style, strike price, expiration date, as well as other features and benefits. These options also give investors the opportunity to trade on a larger scale with expanded and limited position limits. But one thing I found interesting is, where is it? The options target over-the-counter market of index funds, provide customers with more flexibility. Flex options now trade on other exchanges. So they're trading on other exchanges. I remember a YouTuber talking about that. They go outside of the New York Stock Exchange somehow, but again, that's a whole nother video itself, that whole complication. But anyway, these bullets talk about options. I'm not going to get into that. Here's the synthetic covered call strategy. So it basically says a traditional covered call strategy is an investment strategy where the investment sells a call option on the underlying security it owns. So what you guys are familiar with is you have to own 100 shares of a stock, then you could sell covered calls on it. They do not, however. So they do a synthetic covered call strategy where they buy and sell options over a long period of time, creating synthetic shares. And the point of that is they're basically, they're just following the price of Tesla, the ups and downs. Okay, what else we got here? So the fund's synthetic covered call strategy consists of the following three elements, each of which is described in greater detail, which, we don't get too much detail, but synthetic long exposure to Tesla, which allows the fund to seek to participate the changes up and down in the price of Tesla stock. Again, that's the synthetic, part. Covered call writing. This is obviously where people, where they do covered calls to generate income. This is how they get the massive distribution payment, because Tesla itself is very volatile. When a stock is volatile, it produces more income on the options. Since they do not directly own Tesla, the money is still available to them. So they buy US Treasuries, which allow them to generate additional income via interest. And these treasuries can be used as collateral. So they're very smart because they're not putting the money into Tesla itself. They're doing the synthetic shares, for that part. But they're keeping the money that's in the fund and investing in treasuries to create additional interest. And with a high interest today, this is beautiful. And at the same time, they use those treasuries as collateral in case, which makes them allowed to do the options. Here's a couple, again, they talk more about synthetic long exposure, which we don't have to do that again. One part I wanted to mention, covered call writing. Again, I made a video on this yesterday. What they do, most covered call ETFs, is they sell covered calls at the money. And that means the day they do it, they sell it at the current price, which means they cannot take advantage of any capital gains from that price. What the YieldMax funds do is they sell covered calls 5 to 15% above the then price. This allows them to take advantage of 5 to 15% capital gains. They won't lose out on that. These are written monthly. So if the stock goes up 5 to 15% each month, then you could pretty much follow, this would follow Tesla 1-to-1. If Tesla goes up 30%, you're going to lose out on about 15% of those gains. So that's the risk, that's really the downfall. Obviously, when Tesla goes down, Tesla goes down, by 1x. But when it goes up, there's a limit, there's a cap. That cap is the strike price, which is, again, at least it's 5 to 15% above. Most covered call ETFs, as I mentioned, are at the money, which means 0% above. What else? Treasuries, yeah, we know, blah, blah, blah. Funds returns. Like I said, most of this is repetitive information. And this is the box. I love reading this. I would recommend at least reading this part of it. This is, they made it nice and pretty. They purchase call options at the money. They sell put options at the money. This is the synthetic share creation. This goes out 6 months to 1 year. And then when creating these synthetic shares, they sell short call options. Short meaning 1 month or less, which creates the options premium. And then again, US Treasuries, they buy them 6 months to 1 year out, which is used as collateral. So, and that's pretty much it. Let me scroll down. This is all too much, a lot of information. They mention here an example. Obviously, if they sell calls 7% out of the money and Tesla goes up 35% over the next 5 months, they're basically saying it depends on the timing. So if it goes up 35% over 5 months and it goes up 7% per month, then you could take advantage of all of that. But if it goes up 10% 1 month, 20% another month, and then down another month, you're going to lose out on anything above that percent that they sell out of the money. I hope that makes sense. If it doesn't, please let me know in the comments, because, again, I'd be happy to talk about options a little more in detail. And I would highly recommend learning options. Even if you don't want to do it, it's just fun. I mean, it's really, it's a moneymaker. So that's it. That's the summary prospectus. So I just wanted to cover that, again, the basics of what this fund's about. I know, again, people like listening versus reading. I'm one of them, but I still try to read. So I figured why not do both? A quick update on my personal journey is I moved my money from the Roth IRAs, the contribution only, so I don't get taxed out my ass, And it's finally clearing today. So I'm going to put some money into TSLY again, OARC, and probably most of the other funds. And I'm looking to generate monthly income starting September of at least $1,300. That would not obviously replace my current income, but it's a start. And then from there, I'm going to use the $1,300 to manually reinvest into YieldMax funds such as TSLY and etc. and go from there. I do not use drip because I want to do the work myself. I don't want them to buy it when it's at the high or whenever whenever that dividend comes in. I'd rather invest it myself based on whatever fund is down that day. So right now I am only buying YieldMax funds. I was looking at Clip for a while. I'm not going to buy Clip because they sell at the money covered calls, which really limits the capital gain on that, but obviously does not limit the downward exposure. So I need to revisit that. I need to see how that works. YieldMax is coming out with a similar option of Clip. Obviously, they're going to sell 5 to 15% out of the money. So I may wait for that. Anyway, yes, I talk about YieldMax a lot, but it's great. And I highly, recommend looking into it. So again, I'm not a financial advisor. I'm just making videos, recording my journey about how I will retire on dividends, and I'll talk about everything that I'm getting involved in. If you have a preference on what you want me to talk about, please leave a comment. Let me know. If you enjoyed this video, please click like or subscribe, all that jazz. It's motivating to see the amount of comments and new subscribers. So that's going to keep me going. So I'll make a video every morning, not every morning, but some mornings before I start working, when I work from home, and then we'll go from there. But if you tuned in this long, I appreciate it. Thank you guys. Later.